Hello, traders. It is 8:02 a.m. here in Chicago. Another wonderful cold day. On Wednesday, the 6th of February, 2016, get long. Um, 2019. Thanks for joining me again on another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall sentiment seems to lean to the risk off side. The bonds are up 15 ticks, 14 ticks, or 0.3%. The Nasdaq is up 16 points though, so a little bit of a mix there. But I'm seeing that the equities are slightly higher, but also safety assets are higher as well. So a little bit of a conundrum there. Gold is off $1.10, trading at 1,318 dollars an ounce. The euro's off. The DAX is off 33 points, 34 points. And of course, the volatility index has been dropping very quickly, and the rate of drop has also been quite incredible, the VVIX. And so overall, it just looks like a mixed bag with a slight edge um, to the risk-off side. Money moving into safety assets a little bit. That's that. This morning, the key drivers, some of the comments made by the U.S. president yesterday, vowing to continue to build this border wall. Um, and just a lot of rhetoric and all that. But that's what the State of the Union has always been. It's a Christmas list and a bunch of um, stuff that doesn't really tell us what is going to happen economically that we can trade off of. There was a reiteration of the fact that he expects that drug prices will be driven down. So it'll be interesting to see how pharmaceuticals do this morning. Um, U.S. Secretary Mnuchin and Lighthizer, Trade Representative Lighthizer, are expected to hold talks with China next week. We'll pay attention to that. That's going to come up in future Trader Bites. We want to keep an eye on that. Um, mostly the futures fell on the State of the Union address as investor sentiment got dented a little bit, with the prospect of another shutdown and a lot of discord within the U.S. government. European markets slightly lower on the back of weak corporate earnings, and Asian markets ended in the green a little bit. Oil prices dipped after reports showed a rise in U.S. inventories. So that's where we are. Looking ahead today at what we can expect to interrupt our auction. We don't have very much until the balance of trade number, expecting negative 54 billion. This is not a. Hang on. Something seems odd here. Yeah, okay. Balance of trade has already taken place. Yeah, there was something going on with my calendar. It didn't seem like balance of trade would be that late. But we don't have much on the calendar. We have Fed's Powell speaking at 7 p.m. Eastern, 6 Central, and we have gasoline and crude oil inventories at 10:30 Eastern. We already had U.S. exports and imports as well as balance of trade. It came out a little bit better, and there's not seeing a lot more that would drive us. Looking at the rest of the week, also not seeing very much. It seems like it's pretty thin. There's some important releases tomorrow from the Bank of England, but that's really it. So let's take a look at our review segment. Yesterday's primary expectation is that we are likely to push out. The primary idea behind scenario one is we're likely to open in a gap, push up and through the overnight high, and then revert back into the range, pull right back to 27.17, and potentially go sideways as the market rests, is expected to rest after a rally day, after a trend day. That was the main scenario. I can't say that the main scenario was very clear in terms of how we trade it. I mean, it was fairly noisy. Um, as we look here, we see that, let's kill this. Okay. We see that it pushed through yesterday's overnight high, pulled back, pushed even higher. Remember 27.35, I talked about this since about a week and a half ago. When we got above 2607, I said 2735 becomes a big magnet in the area. It's the MC point of control. And we got to 2737, which I also have as a stock zone up there. So we actually accomplished getting back towards the major point of control, the most traded price by volume for the last year up to the present, since last January till now. And we held steady there. We got some sellers coming in. We ended up having a neutral day, so we did push through the IB high, and then we ended up with a neutral day down. We broke down into the prior day's range. We could not get back into 27.17. We did end up pushing much higher than I expected on scenario one. However, the overall pattern here, up, down, and then consolidate in the middle, which is what was expected. See this? If you look at the green, if you look at the green, up, down, consolidate somewhere in the middle. The pattern was there. It's a resting pattern, and we had that up, down, consolidate somewhere in the middle. We finished somewhere in the middle, but it did push a higher high, which this portion here was a surprise. Again, the probability of breaking an IB, breaking the other IB, and then further extending the first IB is very low that we would do this kind of thing. This is showing a little bit of strength. The profile is almost P-shaped. It's actually a skewed, balanced profile. We ended up with a point of control and mid on top of each other in the region of VWAP. Overall, a very, very balanced profile. The value area is valid today. And then the overnight session basically carried that forward. So if we look at the overnight session, we just held steady right into the right up to the European Open. So the Asian session just held steady in balance. The European Open brought us back down again. Some earnings were a little bit off, and then it came right back and pulled right back to where it opened right into balance. The profile overnight shows that even though it's got somewhat of a triple distribution here, a little bit there, and there, it really is mostly a balanced profile that's a little bit, has some protrusions in it. And so what we accomplished yesterday was the expectation on a first test from below, again, after extending the low, a first test from below in the 27.35 and a quarter area, the MC point of control. That with the 37.75, 27.37.75 stock zone, which comes from historical look at where the market had some key reversals. One of the important things to do today is, as I'd mentioned in the Convergent Head Trader channel, is to go back to December 4th and make sure that, where are we here? 4th, where are you? Right here. See this day? This is the first big selling day after we peaked out. So on December 3rd, we put in a peak last year, and then we had this huge selling day. A lot of very heavy, you could see very, very heavy volume came in on this day, traded 2.35 million contracts compared to about 1 million or so recently. And that's really where we are. We traded into the 37.75. So the 37.75 comes from the fact that we have the MC point of control. We've got this peak right here, which coincides with the low of the prior, and we've struggled in this area before. So that's where the 37, it's a combination of volume and price action. And so when we look at that, we see that anything above 35.75 really gets us into the thin part of the profile, which is from here all the way up to the next stock zone up, which was 27.70, the next big stock zone up, with the mid being in this area, 27.57. Once we get above here, we might see ourselves grind all the way back up to 27.70. And then we are approaching the 200, I believe it's the 200 SMA on the SPX at about 240, 245. I don't remember the number. So it's important to go back to what I call a template day, or a day that represents where we are now, to see what we've done and what's significant, because that's the most recent auction that took place in the region. And so if you're not looking at history, and many will argue, and I've received many emails about this, why should the market remember what happened last year at such and such a date? It doesn't. It's the market's not a single organism. It doesn't have one brain. It has many participants of many different time frames and positions, and those positions in an aggregate act as a single organism, kind of like single brain cells for single traders or participants coming together to form thoughts and ideas and memories. That's kind of how it works, where a small each individual is a small fractal of a bigger thing, and the market tends to respond to big areas such as 27.37, 27.35, that sort of stuff, 27.70 likely, things like that. It doesn't have to be something that's, as a moving average on your chart, although the market might respond to that too. Who am I to say that it won't? But overall, you want to look at major turning points, because chances are somebody's hedging, somebody's got a position on, or somebody has taken a position that's profitable that now needs to be covered, or somebody in the hole with a hedge and an option that now needs to cover, and so on and so forth. And that together creates what's called market memory. So it's really important to understand that you gotta go back. I'm always going back when I'm moving out of balance, like we have here. We had balance for just 2 days. We broke out of balance. I've got to scroll back and find the last day in which we traded in this region, and look at what's happened in that last day, because that, even though my stock zones do a good job of carrying that forward, it's important for me to see what happened. Here we had a huge impulse down move on this day, and the pullback was at 35.75, which happens to be the around the MC point of control before we had a continuation move. This was an impulse pullback continuation, a traditional move there. So I'm going to pay attention to that 35.75. Is the market going to turn at exactly 35.75? You must be insane to think that the market's going to remember or is going to obey some price to the tick. It's going to operate in zones. It's going to operate in rotations. You got to allow 3.5 points of fluff in this product, although that's collapsed with volatility. And that's why I put zones up, not actual reference lines that represent a clear level. Okay, so that's what we've got. So yesterday, we've made a pretty good run here. If we look at, let me turn off these stock zones. Let me turn off pretty much everything else. You could see that we've made a pretty clean run straight up here. We've been running up since the beginning of the year. We're approaching a record for I think we scored a record for January of the number of consecutive up days, for that month. I believe there's a statistic out there about that. But look at what's happened since the year opened up. The first day back or the second day back, we sold off a little bit, and since then we've been just pushing highs, um, again and again and again. So this, yesterday represents the first opportunity. Well, a first opportunity for us for a neutral day on high. The market yesterday responded well to the higher prices by selling. It went neutral and we went sideways. We ended up with a double neutral kind of formation, creating a bit of an M type pattern. Now, I don't trade patterns, but those who trade patterns are probably watching this low and looking for that to be the pivot, and are projecting this distance here, the 37.75 to 22.75. What is that? 15.5 points, project 15.5 points down to give you 27.07 or something like that for a target on this pattern if you're into patterns. But what we've done here is a stalled out, but we still have a higher high, higher low. We did close the gap even though the IB was closed. That's a low probability statistic that would happen once the IB is in and the gap's not closed. I shared the study somewhere. It's like an 81% probability that it's not going to close by the end of the session. It did close it, but it dipped into yesterday's range just a little bit before coming all the way back and putting in a higher high. So to me, buyers are still very active. As it dips down below, buyers step in and take it right up. This creates a bit of a problem for today. So let's take a look at what we're expecting for today. It creates a bit of a problem for today in that we are the configuration is such that nothing has really changed. Nothing has really changed, and we are stuck in this big area up here, the big MC point of control. So it's a bit of a toss up here. My expectation overall is an open auction based on what we saw in the overnight. I see an open auction in range. I'm looking for the market to dip down into this 26.75, 27 area, and then I'm looking for buyers to step in and then to start to shift this upwards, but ultimately finish again on top of this MC point of control. Remember, for those of you who participated in the webinar series that I did for charity way back then, back a while on futurestrader71.com, those webinars are no longer available. Know that the significance of a point of control in a high volume node is it creates chop. This is an acceptance area, right? The price of peanut butter is now where it needs to be. I'm used to buying peanut butter for $2.50 a jar. The price has gone down to $1.25. The price has been up as high as $5. It's now back at $2.50, and I can go and consume, and the suppliers are happy to provide it. And so we have a high volume node at $2.50 per jar of peanut butter, right? So that's a supermarket analogy, and the $2.50 for the peanut butter, that's $35.75, 27, 35.75, 35.25, something like that. I'm confusing myself with these numbers. 35.25. So I expect that the market is likely to get tangled up here. I don't expect a quick move out of this area. This is the most accepted price. So in being true to market auction principles, that's the expectation for today. The more interesting and quite possible alternative is that we push higher on the open, consolidate, take out this high that we put on neutral, and then impulse down. And then once we start to shift lower, I'm going to get very aggressive on the sell side coming into this 22.25. I'm going to look for it to struggle here, and then I'm looking for it to drop into the 17 and potentially reverse back. It is rare that we come up on an MC point of control or come down on top of an MC point of control and just blow right through. There's a lot of two-way action that occurs in that area. So my expectation is we attempt again and again to break, but we may need to pull back. Buyers may need to pull back and get lower prices to bring in more participation from buy side. The only way to do that is to sell it down. And so we get a pullback before we're able to push through this 35 and a quarter area and then pull back to it from the top, go to 40 to the 200 average, go to 40, 41, whatever that price is, and then pull back to 35 or so and then continue potentially. At the end of the day, what am I? I'm not looking at a crystal ball. I'm not reading cards to determine the future. My plan here is to see how it behaves, and then if it does give me a sell side, if it does test up and gives me a sell side push below yesterday's low, I know that it's scenario 2 is in play, and I know to get very aggressive on the short side, looking to play this structure right here that's fairly poor that we left behind from Monday. If you look at Monday's profile, it's there are a lot of single prints in here and stuff like that. So that's what I'm looking for. I'm going to look for to drop fairly quickly. That would be the better opportunity. The more likely opportunity, given the action that we have, is that we pull back towards 26 or so and then push that high and then just hold steady in this area and get tangled up as we traditionally do on at the MC point of control. I know that's a lot to go through and a lot of information. I've gone way over my time. Good luck today, and I'll catch you tomorrow morning. Take care.